On today's episode, we will be discussing about the organizational structure or the family tree of different assets that are available in the market. We will be discussing their difference, their growth potential, their profit potential, and how investors use them to hedge their investments from risks. This is another episode of the Fine Lecture Series with Katsi Sikat. And welcome to another episode of the Fine Lecture Series with Katsi Sikat. And for today, we're going to talk about the organization and functions of various securities that are available in the market. So let me start this episode with the idea of Adulting 101. So malamang pag naririnig niyo yung salitang Adulting 101, we're talking of responsibilities. We're talking of changing of priorities. So kung dati hindi ka naman nag-exercise, ngayon bigla ka na nag-exercise, you're finally starting to eat right, drink plenty of water, get enough sleep. And syempre, kasama na sa pagmamature ng isang tao is when he or she finally decides to put up his or her priorities when it comes to their finances. Kung paano siya mag-spend ng hard-earned na pera. Okay? Probably you would ask me, ma'am, paano pa ba ako magsisave kung saktong-sakto lang yung budget namin sa family? How am I gonna do that? Kasi hindi na nga ako makakuha ng sobrang pera, kailangan ko pang mangutang. So, paano pa ako magsisave? So, sabi nga nila, no, hindi lang exercise, hindi lang tamang pagkain ang pwede mong sabihing disiplina. So even the way you spend your money is actually a form of discipline. So if you really want to save a portion of your money every month, you can do that as long as you commit yourself to do it. So meron quote dito si Mr. John Regala, no? Very controversial siya this pandemic because bigla siyang sumulpot sa limelight. It's because he was sick and he has no family to take care of him. And so sabi niya, matuto kayong mag-ipon habang bata pa kayo, habang may trabaho pa kayo. Lahat tayo tatanda at lahat tayo magkakasakit. It's very true, no? Pero let me change his statement na instead of matuto kang mag-ipon, since we are in an investment subject, matuto tayo dapat hindi lang mag-ipon kundi mag-invest. Why? It's because most of the wealthy and financially free people are not actually relying on just working. Ibig sabihin, hindi sila nagdidepende sa isang source lang ng income, which is yung work. The reason why you are studying and aiming for a bachelor's degree is for you to get a decent work in the future, correct? But that is not the goal. It's not the ultimate goal. The ultimate goal is for you to start your savings, to start a fund that can in the long run give you additional sources of income. So wag lang tayong mag-aim na ang goal natin ay makapagtrabaho lang habang buhay. Sabi nga ng mga investors, do not work for money, let your money work for you. Do not live for you to pay the bills, kasi para ka lang ginipig na paulit-ulit ang routine na ginagawa for the rest of your life. And so, kasama ng adulting is yung pagkakaroon ng long-term forecast or pagkakaroon ng long-term plans. And so, in finance, meron tayong tinatawag na objectives and goals. So, ano ba yung example sa mga objectives and goals na yan? The most common probably is, ito pinaka-common, ma'am, gusto kong magkaroon ng sariling bahay kasi ngayon wala kaming sariling bahay, nangungupahan lang kami. Ma'am, gusto kong magkaroon ng sariling sasakyan in the future. Or if you are already a parent, sasabihin mo sa akin, ma'am, I want to put up an educational plan for my children or for my kids. And kung single ka or you are in a relationship, you're planning to get married 5 years from now, you would want to have a wedding that is debt-free. Ibig sabihin, hindi mo kailangan mangutang para lang ikaw ay ikasal at magkaroon ng magarbong kasal or yung tinatawag nating dream wedding. For some people, they also would want to establish an emergency fund. Yung iba, gustong matutong mag-invest. Yung iba, dahil very adventurous at advanced naman na ang knowledge sa investments, they would want to have a specific goal when it comes to putting up their funds o yung tinatawag nating mutual fund. So dito napaka-specific na 5% increase. This is annually in their mutual fund investment. So these are just examples of financial objectives and goals, pero napakarami pa niyan. This is just in a personal point of view or perspective. Wala pa to dun sa mga tinatawag nating institutional investors. Magkaibang bagay naman yun, ano? But just for the idea na meron tayong sineset up na objectives and goals, dito na papasok yung role ng finance. The role of finance is, how can I help you achieve these objectives and goals, right? And by the way, the reason why you're putting up these objectives and goals is because you want to give direction to your future spending. Dahil kung wala kang direction, you would be like most of our OFWs na ang tagal nang nagtrabaho abroad, pero pag binabalikan nila, saan na ba napunta yung pera ko? It was just spent with so many things na hindi mo na matandaan kasi they were invaluable, walang masyadong worth yung pinuntahan ng pera. But if you are planning, if you are setting a direction and pace in your financial goals and objectives, after 10 years, after 20 years, you would finally say, it was all worth it. Kasi I can still use it up until now. Nag-appreciate pa rin yung value, nadadagdagan pa rin yung source ng income ko. Hindi naging stagnant yung aking pera, mas naging valuable pa. It's because I knew where to put my money. And so, sabi ko nga kanina, the idea of finance is to answer that question, how can I help you deliver that goal? How can I help you move towards that goal? Kaya nga sa finance, meron tayong tinatawag na investment vehicles. We call them vehicles. It's because they are used as a form of transportation. They are used as a form of channel, daan. And so it's very interesting to know and to note that kaya palang gawin yun ng finance. It makes people lives easier. It makes people lives more comfortable in the future. And so it's a beautiful subject. It's a beautiful subject because you can use it on a daily basis, and you can use it to educate your relatives and your friends, and of course it can benefit you also in the future. And so for the next slides, we will be talking about the different securities or investment vehicles that we are talking about that can lead us towards our financial objectives and goals. So bago tayo dumako sa mga products, sa mga tinatawag nating investment vehicles or investment options or products, let me introduce you first dun sa ating mga markets. Sa Tagalog, we call them palengke. So pag sinabi mong palengke, it's a place or an avenue where buyers and sellers meet and trade. And so in the financial world, napakaraming markets pala, hindi lang iisa. So, for this particular subject, ang pinaka-focus natin is the capital market. Kasi nga, ang title ng ating subject is Investment Portfolio Management and Capital Market. So, aside from capital market, we have the money market, we have the foreign exchange market, the alternative market, government securities market, and the most complex one, and the riskiest market is the derivatives market. So, bago natin himay-himayin yung 6 na palengke na meron at existing ngayon sa buong mundo, let's talk about how they differ from each other. The reason why they are different from each other, kasi sa bawat palengke na yan at sa bawat produkto na meron ang mga palengke na yan, nagkakaiba-iba sila dito sa 6 anim na characteristics na ito. So, first is the risk and reward characteristics, the growth potential, the maturity period, the volatility. Ibig sabihin po ng volatility is yung pabago-bago. So, we're talking of price volatility. Pabago-bago ng price in a short period of time. And then, hedging properties. I'm sure this is the first time you've heard of the term. But hedging simply means protection against something. So, in the case of investments or in the case of financial securities, we're talking of protection against risks. And so, kumbaga parang si Captain America lang yan. Meron siyang shield. So, ibig sabihin, securities from the word itself, secure, or the root word secure, meron siyang hedging properties or shielding properties. And last would be liquidity. Pag sinabi kasi nating liquidity sa finance, this is the ability to convert an asset back into cash. Okay? So, merong mga assets na as you convert them back into cash, naku-compromise yung value. It's because you have to pay a certain amount of money for the asset to be converted. Such as taxes, ganyan, mga commissions, etc., etc. So, balikan lang natin ng bahagya itong ating mga markets, ano? Like for example, kung titingnan natin yung maturity period, one of the characteristics that differentiate one market or one investment to another. Pag sinabi nating maturity period, the capital market is a long-term market. Ibig sabihin, most, or not most, all of the investments that are being bought and sold in the capital market are all long-term. So do not expect that you buy and sell, or you can trade, but the thought of investing is more on long-term. Sa money market naman, it is mostly short-term or less than a year ang maturity period. Foreign exchange market is mostly short term because yung mga trades na ginagawa, yung profits kinikita is mostly on short term. Alternative market is very similar to the capital market in a sense na long term ang pinag-uusapan kasi dyan papasok yung mga real estate, equipment and lease, mga buildings, etc., etc. So mostly these are long term also. Government securities, merong long term at merong short term. For the short-term investments, meron tayong tinatawag na treasury notes or bills. At pag sinabi naman nating long-term, meron tayong tinatawag na treasury bonds. So, they cater both long-term and short-term. While in the derivatives market, this one is very, it depends on how you use it. Because in the derivatives market, mostly, dito binibenta yung mga tinatawag nating financial contracts. Ayan, yung mga put and call option. So, merong short term at meron din naman long term. Now, another one before I move to our next subtopic. Kung titingnan natin, how about the growth potential? Kasi pag growth potential at saka risk and reward halos magkasama talaga yan eh. In finance, we have the risk-return trade-off principle that the higher the risk, the higher the reward. Correct? And so, pag sinabi nating growth potential, the potential of your investments to grow over time. Kumbaga yung example ko kanina sa Jollibee, it's very similar to that. Sa capital market, napakataas ng growth potential. Money market, not so much. It's because it's short-term. Foreign exchange market, it's very volatile. So, dahil very volatile, mataas yung chance na ikaw ay mag-lose at mataas din yung chance na ikaw ay mag-gain. Sa alternative market, this is a high growth potential. Government securities, because we're talking of government, ito yung investment na alam mong walang kalugi dahil alam mo na ang gobyerno ay hindi naman nababankrupt. So, anything with low risk, alam mo na, ibig sabihin, mababa din ang return. Mababa, pero you are secured. So, government securities are actually compatible for, let's just say, yung mga conservative na investor. So if you're looking for a low risk investment, you settle for government securities. And lastly, for complex or highly globalized firms who are using foreign exchange currencies in their day-to-day trading, they are using derivative securities. So they're using contracts just to make sure na they are secured from the foreign exchange risks that are happening during their trading period. And so sa derivatives market, in terms of growth potential, if kasi ang purpose talaga ng derivatives is not really for growth but for protection from risks. So, ganun din, it's either malaki yung gain mo, just like sa foreign exchange market, it's either you lose big or you win big. Ayun. So, it depends on, it's a case-to-case basis. So, sabi nga nila, ang investment ay para din namang sugal. May kasama talagang risk whether you like it or not. Now, let's talk about the capital market. You know, the capital market is very controversial in a sense that there are majority of people who are taking advantage of this market. And this is where mostly the income inequality in a particular country or in a particular economy occurs. Of course, there are pros and cons to the side effects of capitalism, but in a country like the Philippines, we can say that all throughout these years we've benefited from capitalism because it has contributed taxes to our country, it has contributed employment, it has contributed development, of course. It contributed to I could say, the intelligence of the Filipinos when it comes to being exposed to the workplace that are mostly, of course, influenced by the Western culture. So the downside of it is most likely, as we are experiencing right now, is the sustainability of the firms operating in our country, the openness of other economies to invest in our country. And we're talking of sustainability, we're talking of the effects of climate change, the effects of the lands that are being converted into various commercial and manufacturing or industrial cities. So things like that. But of course, when we say capital market, it is really a venue where firms can raise capital or raise funding for like 5 or 10 years, 15 or 20 years. You can't do this by simply resorting to the money market, because money market is really for short-term funding. Capital market is for the long-term funding. So, as you can see, under the umbrella of capital market, both publicly listed companies and private companies benefit from this market. The only difference is the private companies have predetermined shareholders, while publicly listed companies, they are open to anyone from the public who are interested to join, to share the profits, or to be part owners of a firm. So there is ownership by the public and not just simply by the founding owners. So kung ikaw, you're interested to be a part owner of Ayala or the SM group, no? You can just simply look for a broker, and through that way you can now be a part owner, right? You can buy shares or you can buy bonds, and you can enjoy the profit that the company is enjoying. So also, if you are enjoying the profit, you would also be part of the losses that the company will be incurring in the future. So under the publicly listed companies, there's what we call the primary and the secondary market. The primary market is usually where the IPOs happen. IPOs are initial public offerings. So if you're a private company who decides to be enlisted in the securities market, or in the case of the Philippines, we have the Philippine Stock Exchange. So you are a private company, you want to convert your firm to a publicly listed company, you would enlist yourself in the Securities and Exchange Commission. They will be supervising the firm, meaning you are then required to submit documents that would show legitimacy of your firm. You are now under the supervision of the government, since it is your accountability to be transparent to the public, since you will be given the benefits of showing or showcasing your shares to the public. Sabi nga ni Spider-Man, with great power comes great responsibility. And so therefore, if you are a publicly listed company, you are under the supervision of the government through the SEC. Now, so going back to the primary market is where, like I said a while ago, where the IPOs happen. So kapag ka first time nag-issue ng shares ang isang publicly listed company, ang tawag dito ay nag-i-issue siya for the first time, so it's called the IPO or initial public offering. So there is a ritual in the stock exchange na kapag first time mo mag-issue ng share, you usually ring the bell, which signifies more wealth and good luck and prosperity to the company. Okay, now in the secondary market, more than the primary market, the secondary market is more liquid, more active, in a sense that it makes the shares of the firms that are listed in the PSE more active. So in short, mas nagiging volatile yung prices ng shares ng isang firm because of the secondary market. Why? This is where the trading of stocks really happen. At dito kumikita yung ating mga brokers. And siguro just to make it more interesting for you, I want to take note that the word trading and investing is different from each other. Because investing is putting your money and letting it be exposed in the long run. Meaning you have no intentions of selling your stock in the next 5 years or 10 years. The reason why you are buying that stock is just to let it grow over time. Okay? But for traders, usually they trade in 1 week, 2 week, or 1 month interval. They're just looking for gaps in the market where they can take advantage of the highs and lows in the prices. Okay? So the secondary market provides liquidity in the primary market, in the sense that the trading goes on in a daily or weekly basis. And of course, the publicly listed companies are known to issue equity and fixed income securities. When we say issue, these are the securities that they sell. Okay? Ito ay yung binibenta nila. So ang pinakasikat na mga products ng publicly listed companies under the capital market are the shares or the bonds. So when you say equity securities, it is very similar to the word shares, because equity means ownership and shares of stock just simply means share of ownership. Okay? And most of the shares that are traded in the stock exchange are what we call common shares, and we will be talking about common shares a little bit in this video. And when we say fixed income securities, we're talking of bonds. Bonds are a form of debt instruments, in a sense that they act as loan. And when investors buy fixed income securities, they become the lender. And dahil sila yung lender, yung mga investors yung lender, sila ang nag-act as nagpapautang sa kumpanyang nag-issue nung bonds. So of course, in the financial management principle, we have what we call the risk-return trade-off. So if you're willing to risk something, you are also expecting something in return. And so when you invest in bonds, you are entitled to receive interest. And the reason why it's called fixed income, it's because you are entitled to receive interest payments every year, or it depends on the period that the firm is or the firm has stated on your bond certificate. Usapan naman natin ng equity securities in a deeper perspective. We know now that equity securities are issued and sold by both private corporations and publicly listed corporations or companies. The difference is that in private corporations, predetermined na yung mga pwedeng bumili or maka-access sa mga shares na ito. Meaning, they are selected. They have the expertise most likely dun sa field of business. They are wealthy enough. They have the financial capacity to purchase these shares. So may kamahalan talaga. In terms of publicly listed companies, from the word itself public, everyone who is interested to purchase these shares can do it. No? Ibig sabihin, as compared to private corporations, aside from only a few people can have an access to their shares, in public corporations, napakamura. In fact, you can buy a 50 centavo share or a 1 peso, 2 pesos shares. It depends on the company which you would want to purchase your shares. Now, what is the difference with a preferred share and a common share? With common shares, most of the issues that are being traded in our stock exchange are common shares. Meaning, if you purchase this share, you are now entitled to vote during shareholders meeting. Ibig sabihin, meron kang karapatan, meron kang boses. It's like you are really a part owner of the company. Well, the power of your or your voting rights depend on the number of shares that you hold. That's why we have what we call the majority shareholders. They hold mostly 20%, 30%, or 40% of the entire shares of the company. Meaning ito siguro yung first family, no? Yung founding family, they are usually the majority shareholders of their own company. And so, common shares in return, common shareholders are entitled to receive dividends. Okay? And so, the other classification of equity securities issued by publicly listed companies are the preferred shares. From the word prefer, ibig sabihin mas gugustuhin. Okay? Bakit? As compared to common shares, mas mababa ang risk na meron ang preferred shares as compared to common shares. The number one reason is that in terms of the liquidation of a firm, let's just say, hindi mo inaasahan, no matter how stable a company is, it's still unpredictable if hanggang kailan ba mag-i-exist itong kumpanyang ito. Now, in terms of liquidation, it is the obligation of the firm to repay its debt holders and creditors. At kasama na dito yung mga preferred shareholders. In terms of liquidation, the common shareholders will always be the last group of people who will receive any form of return or dividends by the company. Now, the preferred shareholders, as compared to the common shareholders, wala po silang voting rights. And speaking of equity securities, I know you've been seeing the word depository receipts for the past few months, especially during the hearing of the ABS-CBN franchise renewal. They kept on saying that they violated the Philippine law because they're not supposed to issue shares to foreign entities. So ano ba yung depository receipts or Global Depository Receipts, GDR? This is actually a certificate that is issued by banks, which means that you hold a particular security or stock in a foreign land. So, ibig sabihin, kung foreigner ka and you wish to invest in a local company in the Philippines, you can do so. That is possible if merong binibenta nga naman. In other discussions that we will be featuring shares, pag-uusapan natin sa Chapter 3, pwede bang bumili ang mga foreigners ng shares ng isang Filipino listed companies? So the answer is yes. There is actually a classification of Class A and Class B stocks. So pwede. But the question is, ilang percent lang ba ang pwedeng bilhin ng mga foreigners sa isang Filipino company? So the answer will always be yes, it's possible. Yes, ma'am. So therefore, if you are a foreigner and you wish to invest in a local firm, in return, the bank will give you what we call the global depository receipts. Now let's head on to another form of securities that are issued by publicly listed companies under still the capital market. We call them the fixed income securities, or famously known as a debt instrument, or popularly known as bonds. Okay, so ano ba yung bonds? As compared to common shares, as compared to stocks, bonds are more conservative choice of an investment. Why? Well, again, in terms of liquidation, ang unang-unang mababayaran talaga, aside from the suppliers, of course, and then the lenders, which are the banks, now comes the bondholders. So ito yung hierarchy kasi ng tinatawag natin na who's gonna be paid first in terms the company goes bankrupt. Okay, so it's a more conservative form of investment, although of course risk pa rin, high risk pa rin ang pag-invest sa mga huge corporations. No matter how stable they are, it's still a huge risk. Ang sinabi ko lang ay mas mababa ang risk as compared to shares or equity securities. Now, there are so many form of bonds, but really, how do they work? No. If I will ask you, is there any idea inside of your mind right now how bonds actually work? So, kung first time mo siyang ma-encounter right now, probably wala kang alam about it. But for some of you, siguro may idea na kahit papaano. If a company issue or sell its bonds, like for example, I am Globe or Ayala, I'm gonna issue 15 billion worth of bonds. So how does it work? So you as an investor, you're going to purchase, let's just say, 200,000 worth of bonds. So meaning, ikaw ay nagpapahiram, since it's a debt instrument, ikaw ay nagpapautang ng 200,000 kay Globe or Ayala. So therefore, dahil ikaw yung nagpapautang, you are now entitled to receive interest. That's the reason why it's called fixed income. It's because every year, let's just say the maturity period of that bond will be 5 years. So sa loob ng 5 years, the company is required to give you a fixed rate of interest as specified in your bond certificate. You are entitled to receive that interest in a yearly basis. And at the end of the maturity period of the bond, you are entitled to receive the entire investment. Kasi nga pautang. Ibabalik sa'yo yung 200,000 mo, which we call the principal value. And at the same time, you were able to receive interest during that time frame. O diba? Kaya siya low risk is because alam mo at the end of the maturity period, makukuha mo ng buo yung 200,000 investment or principal amount na ipinahiram mo. Now, what are these other types of fixed income securities? Meron tayong tinatawag na government-issued bonds, or we also call them as treasury bonds. So, alam naman natin, pagka government-issued, hindi po yan sa mga private or publicly listed corporations. These are fixed income securities that are issued by the government. So, unlike commercial firms or publicly listed firms, government bonds are actually the safest form of securities. Bakit po, ma'am? Bakit nyo po nasabi yan? It's because syempre, hindi naman nababankrupt yung gobyerno. There is no way na pwedeng mabankrupt ang isang gobyerno. But in the case of Greece, paano yun, ma'am? Diba? Nagkaroon nga ng meltdown noon. That's why a lot of countries kailangan ambag-ambag para maibalik dun sa dating sigla o ekonomiya ng Greece. So, pwede siyang mag-shutdown, but of course, it has to reopen. Ibig sabihin, babalik at babalik pa rin siya dun sa kanyang dating takbo. Greece was actually bailed out by the European Union with the help of World Bank and with the help of other countries. Kasama na dun yung Pilipinas. Okay, so again, treasury bonds are less risky as compared to corporate bonds. Tandaan po natin yan sa financial management principle 1, risk-return trade-off. The higher the risk, the higher the reward. So, since very minimal lang ang risk sa government-issued securities, mas asahan na natin, mas maliit ang return or mas maliit yung interest rate. Now, we have convertible debt. So, ano to? If before you decided to buy a bond from a particular company, pwede mo namang hindi ibalik yung pera mo. Like, for example, like I said kanina, you bought a bond worth 200,000. Instead of getting back your money, pwede mong ipa-convert into shares yung bond mo. So, I think that is a wiser decision. Bakit? Kasi, if you are a beginner in investments, you can start with bonds. And then eventually, if you become more comfortable in trading or putting securities in your portfolio from bonds, slowly you can convert yourself to a stockholder. So, merong feature yung corporate bond na at the end of the maturity period, meron kang option to convert it into a stock. That's why it's called a convertible debt. Next, what about zero coupon bonds? Ma'am, ano yan? No? Well, kung titignan natin yung features ng isang bond, syempre meron siyang interest rate, meron siyang maturity period, nandyan yung kanyang face amount. With zero coupon bonds, it doesn't necessarily mean zero coupon bond. Ibig sabihin wala siyang interest. Wala siyang interest rate. Kasi that's how bondholders secure themselves with the profit, no? Meron siyang interest dun sa on top of the face value of your loan. Now, with zero coupon bonds, unlike corporate bonds, you are entitled to receive a yearly interest payment. But for zero coupon bonds, you will be receiving the entire interest at the end of the maturity period. Ibig sabihin, after the maturity period, makukuha mo yung face amount ng investment mo plus lump sum all of the interest that you are entitled to receive. So, kapag ka zero coupon bonds, asahan mo na mas mataas ang interest dahil hindi kailangang mag-issue ng yearly interest ng kumpanya. So, one time, big time. That's why it's called zero coupon bonds. Now, what about junk bonds? Sa madaling salita, no, without trying to explain it in a lengthy statement, junk bonds are high-risk bonds. We know that bonds are a safer option when it comes to investment, but junk bonds are high-risk bonds. So, as compared to corporate bonds, zero coupon bonds, they are riskier, hence with higher interest rates. What about commercial papers? So, commercial papers are issued by corporations pero short term lang, less than a year lang na mga pautang ito ng kumpanya. After talking so much about the capital market, now let's move to another major financial market, which is the money market, or also called as the liquid market, or also known as the market where firms or the government usually source for short-term funding. So, short-term means less than a year. So, sa totoo lang, kung isa-summarize natin itong mga iba-ibang financial instruments that are used in the money market, nagkakatalo-talo lang yan kung sino ang nag-i-issue, anong purpose, and usually gaano katagal. So let's start with certificate of deposits. These are usually issued by depository institutions or also called as banks. So ang mga bangko ang nag-i-issue niyan sa mga firm. And also, bankers' acceptances are also issued by banks. Pero the question is, para saan? What's the purpose? These are used by huge corporations with global operations. Ibig sabihin, they are using bankers' acceptances for them to pay for their huge inventories or huge supplies. So instead of them paying with cash, they will go to their banks and ask them to give them pautang na kanilang babayaran in less than a year. So para ma-purchase nila right now yung kanilang mga stocks, they would be using bankers' acceptances. So this is a form of a loan which is really used for that purpose, no, yung pagbili or pakikipag-transact sa mga foreign suppliers. So it's really an utang. It's not a source of fund, but it's a form of pautang coming from depository institutions or banking institutions. How about commercial papers? I think I've mentioned this a while ago, no? Ang commercial papers naman ay ini-issue ng mga corporations. It's like corporate bonds, but they are more on short term. So kapag ka short term, we call them commercial papers. While repurchase agreements naman, these are instruments that are issued by government securities. So if you are purchasing treasury bills, this is the purpose of buying and selling a government security and repaying it in probably 7 days or a month time frame. So, ganun. No? Very short term lang talaga yung kanilang by nature. Aside from the money market, one of the most liquid markets in the entire world is actually the foreign currency exchange market. In fact, in 2019, before the pandemic happened, an average of $6.6 trillion per day, no? Per day po ito na exchange volume ang na-i-record sa forex market. Just imagine, $6.6 trillion. Meaning, ganun karaming nagtitrade per day sa forex. Maliban sa mga individual traders, we also have institutional traders. We have the banks. We have the huge global companies, of course, who are transacting with other currencies in the entire world. So, if you're a highly globalized firm, you must be investing in the forex market. Sino pa ba? We have insurance companies and other huge institutional investors. We know that pag sinabi kasi nating forex, we're talking of foreign currency. And so, let's talk about the reserve currencies. Reserve currencies are the amount of foreign currencies that you put inside your banks or your central bank. Now, iba po yung commercial bank at iba yung central bank. The institution or the entity who is designed to print our local currency is our central bank. And so we have reserve currencies inside our central bank which backs up our foreign trades, our foreign transactions with other government entities, the World Bank, etc., etc. Kasi when we do foreign transactions, we do not spend peso, we spend our dollars. So in other countries, aside from dollars, they have the euro, they have the Japanese yen, the Swiss franc, and the British pound. So meaning lahat po ng mga naka-enumerate na reserve currencies are one of the most stable, actively traded, And of course, they are very famously used by so many countries in the entire world. So, wala kayong nakikitang Philippine peso dyan, meaning we're not yet that stable for other countries to make our local currency as their reserve currencies. So, here is another form of currency that has revolutionized the face of money and how we see it. Because actually, cryptocurrencies began as early as 2008. It was created by a Japanese programmer. Initially, you know what? Bitcoin started trading at approximately $0.08 per Bitcoin. And currently, as I am speaking, it is now valued at 11,620.50 US dollar per Bitcoin. Just imagine, we are 12 years, 2008, no? 12 years, and tignan nyo naman yung naging growth nung kanyang value. Maraming bumabatikos sa Bitcoin in a sense na hindi mo siya pwedeng i-consider as a form of investment kasi wala siyang source of value. Anything that is valuable, anything that may pinagkukuhanan ng intrinsic value can be called as an investment. And so, even Warren Buffett himself, hindi siya naniniwala sa cryptocurrency kasi hindi niya makita yung value ng investment na to. And for some people, na very, pa rin sila, they're not really comfortable using it as a form of investment. But as you can see, no, from that $0.08 to close to $12,000 per Bitcoin, you would ask yourself, am I missing something right now? Am I being left behind? Because they are saying this is going to be the future of our currency. In the future, hindi na natin kailangan ng central banks. Our currencies will be decentralized. Ibig sabihin, hindi na iisa ang pinagkukuhanan ng currency sa buong mundo, because that's how cryptocurrency work. Tinatanggal niya na yung foreign exchange rate risk. Nawawala na yung borders in between. Kasi with us, we have to, meron pa tayong tinatawag na foreign exchange rate. At syempre, kapag merong ganyang palitan, merong nakakalamang, merong nalulugi. But for cryptocurrencies, tinatanggal niya yung ganong foreign exchange rate risk. Mas mabilis ang transaction at nawawala yung fear of volatility in terms of foreign exchange rate transactions. Okay? And also, it serves as a form of investment na rin. I have a friend who invested 60,000 pesos worth of Bitcoin, and now you can just imagine almost 500,000 na yung value ng kanyang investment right now. And so, hindi mo mapipigilan mag-isip na, really, is this going to be the future of our currency? So, they are saying, some articles, some videos are saying that there will come a time na mawawala na talaga yung ating central banks at magiging ng decentralized because of cryptocurrency. So, we can say, no, hindi siya imposible with the trend of technology going on right now. Everyone has their smartphones. Kung dati walang nag-online shopping masyado, ngayon with the presence of Alibaba, of Amazon, eBay, they're also using cryptocurrencies as their form of payment. No, hindi malayo na doon na nga siguro tayo papunta. The capital market is also known as the traditional market. And so when we say alternative market, it simply means that aside from the stocks and bonds that are traded in the capital market, we have different investments which are considered also as a high growth potential with high risk. We also have alternative markets that cater to non-financial investments. So what are these? These are usually real assets, and the capital markets instruments are called as financial assets. And so with the alternative markets, they usually cater real assets. So something that can be touched, something that can be seen, something that can be smelled. So Thus, they are called as real assets. So the most famous example of a real asset is the real estate, because this is where usually wealthy individuals or the brokers, the land developers, the real estate developers exist. It's because of the real estate. Dahil napakalaki ng kita pagka sa real estate ang negosyo mo. That's why in 2008, most of the businessmen wanted a piece of that profit coming from the real estate. And because of the hype, everybody wanted to be part of that hype. Nagkaroon na eventually ng stock market bubble. At dahil doon, it ended up with the 2008 US financial crisis. It's because of the real estate. And so, it's high risk, but the growth is very, it's very enticing. Ibig sabihin, ikaw ay you will be influenced really by how profitable this market can be. So aside from real estate, we also have equipment and leases. This applies to huge corporations who are probably in the area of construction and development. So commodities are actually high risk form of investment. Yeah, in a sense that the price of commodities are also very volatile. And aside from they are very volatile, they are very rare. For example, we have gold, silver, and copper. The price of gold is at least in 2019, it went up, it skyrocketed up to $2,000 per ounce. Just imagine. And one of the other popular commodity is actually oil. It's very hard to speculate on when the prices of oil will come up or come down. And then we also have agricultural products such as wheat and corn, which is traded in volumes, especially in European countries, in the US, in China. No, napaka in demand nga naman talaga ng wheat. What else? We also have precious metals, other precious metals. So anything that has something to do with highly traded goods that are highly valuable as well, we can term it under commodities. And meron pa pala, no, yung mga collectible items, they are also considered as commodities. Aside from that, we have agricultural land, buildings, and warehouses that are also for lease. If you are a very nationalistic investor and you would want to ask yourself kung ano ba ang pwede kong may ambag sa Pilipinas, well, one good answer is actually to invest in government securities. The two most famous government securities around the world are actually treasury bonds and treasury bills. The only difference is their maturity period. Treasury bonds are usually long-term and treasury bills are short-term. Well, in the Philippines, treasury bills are, as I am speaking right now, on July 2020, the rate of a treasury bill is at 1.69%, while treasury bonds are at least 2.6%. As compared to corporate bonds, napakalayo naman talaga ng agwat ng rate, no, interest rate ng treasury bonds as compared to corporate bonds. Well, of course, syempre, the purpose of corporate bonds is for profit, while the purpose of government or treasury bonds is for government projects. So you can't make profit in the government. Well, technically, yeah. So, although the interest rate for government securities are very low, we could assure that as compared to corporate bonds, the risk for government securities are relatively low. So if you are a conservative investor and you are just probably, kumbaga, nagsisimula ka pa lang sa mundo ng investment, isa sa mga pwedeng magandang start would be investing in government securities. Oh, we can't even say low risk. Government securities are actually risk-free. That's why in the computation of our risk premium, we are taking into consideration the rate of risk-free investment, which the basis comes from the rate of treasury bills. So meaning, kung titignan natin yung hierarchy of risk, if you would start or you would try to become an investor in the future, begin with the treasury bills or begin with government securities because they are the basis of risk-free investment. And so, kapag ka nakakita ka ng investment lower than government securities, medyo mag-isip-isip ka na. So, meaning this government securities market really is not for profit, but rather it is to keep our economy going and to help our country prosper. Alright, now we've come to the last type of market that we will be discussing here on episode 2, which is the derivatives market. This is known to be the most complex, the high risk market that actually wealthy investors are mostly focused on, because if you are a very aggressive investor, you're only looking for the most risky option in your portfolio. And so the derivatives market is simply described as the biggest, or in other terms, gigantic market, because as of 2020, the derivatives market is valued at over 1 quadrillion US dollars. My goodness. That's like 10 times or 10 times more than the biggest GDP in the entire world. 1 quadrillion dollars. This is because most of the assets that we've discussed since the beginning of this episode, from equities to commodities to bonds to even currency or the forex market, is included in the derivatives market. It's like betting. It's really betting on any kind of asset and putting it in the exchange market or trading it with other interested buyers, and that's it. That's how you make money. And when we're talking of commodities, let's just say, for example, oil, we are already talking of millions of dollars of contracts. And then we still have gold, we have silver, and then we have the real estate, and then we have other asset-backed securities. Just imagine that entire group of assets into one market. That's really an enormous kind of market. And so not everyone are privileged. Not everyone has the access to this market, because only knowledgeable and expert in investments are allowed or even has the capacity to trade in the derivatives market. But to make it really simple, the derivatives market it's like a gamble. It's betting on something that you really don't know. But for huge corporations, for huge businessmen, they are using the derivatives market to hedge themselves from uncertainties or risk. And so there are two parties, the one that is betting on the risk and the one that is taking the risk. Okay? So, for example, in a forward contracts, like for example, magtatanim ka ng palay ngayon, and I will finance your rice field, and I will bet that this is going to be the price of the entire rice field. Okay? You'll never know if the rice field will prosper or not. And the farmer, at the same time, hindi niya alam kung anong magiging trading price ng palay niya in the next coming months. And so with the forward contract, the one party would be on the profiting side and one party would be on the losing side, right? But that's how gamble works. That's how betting works. And huge investors really bet on this gaps that are happening in the market. It's purely speculation. Future contracts, in uh, in in contrast to forward contracts, future contracts are more organized. No, they are actually being traded in the exchange markets. In the Philippines, wala pa tayong future contracts na tinitrade dito sa atin, because future contracts are really more complex as compared to the plain securities. And so, aside from forward and future contracts, we also have option and swap contracts. So, option contracts are giving buyers and sellers some options to buy or sell in the future given a predetermined price. Swaps, on the other hand, are para lang siyang barter. No, you're swapping two assets with the same equivalent at a certain time in the future. The derivatives market is really, in a simple term, a very complex market in which it has the highest form of growth potential, the highest return, but with the highest risk. Since we're talking about financial contracts and we're also talking about huge amount of risks, one of the most famous financial contracts are actually insurance contracts. So this is used by individuals or huge corporations to protect themselves from incurring possible damages or financial loss in the future. So in a form of policy, individuals or corporations can sign up to insurance contracts, but it depends on the amount or the value of the property that is being insured. It depends on the asset that is being insured. So meaning, kapag mas valuable yung isang asset or mas mataas yung kanyang price, mataas din naman yung insurance premium na kailangan mong bayaran for the company to cover your future losses. Having said that, there are also a lot of insurance that are available aside from the life insurance or the personal insurance that is very popular in the Philippines. Tayo kasi mga Filipino, dahil hindi tayo masyadong knowledgeable about financial risks, we do not patronize insurance contracts that much as compared to other countries. And so, aside from life insurance, we also have property insurance, we have marine insurance, fire insurance, liability insurance, guarantee insurance, and the likes. In fact, you can also insure your investments, right? So, dun sa napanood ninyong documentary, we've seen that the very famous insurance that was used during the 2008 financial crisis was what we call the credit default swaps, whereas the asset-backed securities, which is a form of a derivative, was insured using credit default swaps. So in case something happens with the investment, this insurance company will cover the loss that is very potential with owning that kind of high-risk investment. But turned out, since it was just a hype, and most of the firms that are into the real estate industry were concealing the real health of their companies, turned out na it was gonna cause a huge bankruptcy, and so this led the insurer of this several securities to also go bankrupt. It wasn't just the companies that bought these securities that went bankrupt, so even the insurance companies who insured these securities went bankrupt. This only means yung mga insurance companies ay probable din na sila din mismo ay mabankrupt in the future. And so in the Philippines, in the case of the CAP, yung College Assurance Plan, it was very famous in the 90s, and then it turned bankrupt because they were not able to manage their funds really well. So kailangan din mag-ingat din tayo sa pinipili nating insurance companies na kung saan mag-guarantee sa future properties natin. Now that we've discussed all of the assets that are available in the market, I'm sure there will be individuals that will be hesitant to be investing stocks and bonds on their own. And so the answer to that is actually pooled investment funds. So meaning this is a form of it's a form of an organized group investment scheme, whereas fund managers are collecting money from the potential investors. And so as a group, it's very similar to the Filipino very famous paluwagan. So sa paluwagan, mas maraming naguhulog, mas malaki yung pwedeng perang ma-share dun sa pondo ng grupo. And so it's very similar to that idea. When there are a lot of investors contributing to a certain fund, the potential profit of the group will also be high. And at the same time, the potential loss of the group will also be possible. And if you share the profit, you will be also sharing the loss. And the purpose of pooled investment funds is to outperform the current market. So for other mutual funds or UITF, in a year, they would be targeting at least an increase of 5% in the stock market performance. There is a famous saying in personal finance which says, do not put all of your eggs in one basket. And that is exactly the purpose why pooled investment funds exist. So what are the difference among mutual funds, UITF, VUL, and hedge funds? Well, in terms of ownership, mutual funds and unit investment trust fund only differs because in UITF, you are literally purchasing a unit of the fund, while in mutual funds, you become an owner of the shares or the bonds that you purchase in that particular fund. So in terms of the structure, they're really different. And aside from that, there are various mutual funds that are available in the market. An example of that is we have what we call the growth funds, which are mostly in stocks. We have the dividend funds, whereas the fund manager pool or gather together good dividend paying companies. And then we have the balance fund. We have a balance of commons. We have a balance fund between equity and fixed income securities. And then we have hybrid funds, we have value funds, debt funds, index funds, gilt funds, and other types of mutual funds. With UITF, it's the same with mutual funds, except that you are just purchasing a unit of that trust fund. And then with VUL, VUL are actually half of it goes to your personal insurance and half of it goes to your investments. VUL are products of insurance companies. And hedge funds, this is described as the most sophisticated, highly expensive type of pooled investment funds. In fact, if you're going to search one of the highest paying job in the world, you will end up with the answer of a fund or a hedge fund manager. So ganun kalaki yung kinikita ng isang hedge fund manager because only the wealthiest and the most influential people have access to hedge funds because they are highly sophisticated and only the most expert and knowledgeable in investments and portfolio management can have an access to this kind of funds. And so you know that when a fund is high risk, you know that the return is also very high. So just to give you an idea on how mutual funds actually benefit beginner investors or investors that aren't really confident on investing on their own. If we're going to look at the hierarchy of returns in terms of investment alternatives or investment options, in a savings account, if you put all of your money in a savings account, every year your money will grow for at least 0.75% per annum, meaning that's the interest rate of the banks. If you put all of your money in a savings deposit, it's only 0.075, just imagine. And if you're going to put your money in a treasury bond, it's going to earn 2.6% per annum, as compared to an average corporate bond will give you at least 4 to 6% per annum. What about with mutual funds? If you're going to invest in a, let's just say, a bond fund of PhilAm Bond Fund Inc., you will get at least 12.24%. That's per year. So just imagine the difference between investing in a single security versus a mutual fund. If you're planning to open up a UITF, you would have to shell at least 10,000 to 100,000 pesos for you to get a portion of that UITF. But if you're going to open a mutual fund account, it will only cost you, for some banks or for some institutions, they're just gonna charge you for as low as 5,000, and you can already join a mutual fund group. And for VUL, since this is an insurance, you will be paying a premium of, for as low as 1,800, or for an amount of 2,500 per month, you can already avail of a VUL. So again, there's no excuse that you're not knowledgeable enough, that you do not have the financial capacity to do it. It's like I said, it's just a matter of discipline on how you will plan your future financial growth and financial independence. So there are a lot of options in the marketplace right now. There are so many financial institutions catering to these different funds, and they are so accessible, and most of the time you don't have to go to the bank itself. You just need your phone and you have your access already. Finally, after discussing about the different assets, the different investment alternatives, now that we are knowledgeable about what pooled investment funds are, it's probably high time that we define what investment portfolio management is all about. It's really simply, when we define portfolio, we're just saying a group of something. So it's like a basket of something. So when we insert the word investment, it's like a group of investment and how you manage it. And so the essence of our subject is really how to come up with the right judgment when it comes to stock selection, and how do we make sure that this stock selection or this investment options really caters to the character of our clients, how they cater to the objectives or long-term objectives of our clients, and does it really match the risk profile of our clients. It only sums up to that. You are getting to know a client or a person, whether it's a group or an institution, and you are doing a customized fit. It's like a painting. It's a customized thing that is applicable to this person, and every person is really unique. And so investment portfolio management as a subject is not just based on numbers. It's based on it's based on research. It's based on getting to know a person in a deeper perspective, not just on the numbers but their aspirations. Really, it's a beautiful thing that you can make someone's dream come true, and that what investment portfolio management is really about.